On today's episode, we are going to take a look at three stocks that I believe are sitting at a great price for long-term investments. All three stocks are in different stages of their life. The first stock we're going to take a look at is one that is positive in earnings, super strong fundamentals, and is more what I would consider a value play right now, still growing at modest level. The second stock we're going to take a look at is one that I would consider a hyper-growth stock. It has a market cap of less than $5 billion, and it's in the market that I believe will continue to grow. The final stock is going to be a stock that's a bit bigger, growing at some strong levels, but I wouldn't consider it a super hyper growth stock. Like always, we're going to try to understand what they do. We're going to look at recent news, even some price targets for each company. If this is your first time here, make sure to hit the subscribe button. Don't forget to hit the thumbs up and follow me on Twitch where I live stream, taking a look at stocks you want me to look at. So let's get started. But before we begin, let's take a listen to today's sponsor. I want to thank the Motley for sponsoring this video. The Motley is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fubo offers. Through the Motley Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fubo.com/Jose Najarro or click on the link below for access to my special offer and decide if the stock advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. Right, so the first stock, like I mentioned, is going to be one that maybe you might not be excited about growth stocks right now, but there's always some nice tech stocks out there that are outside of the growth realm but can still provide great returns to investor. The one we're going to take a look at right now is Apple. This is traded under the NASDAQ as ticker AAPL and is currently sitting at $129.35, and it's up about 1% as I'm recording this video from its all-time highs that it saw in January. The stock has pulled back about 10%, and it currently has a market cap of $2.17 trillion. All right, so now let's take some recent look at Apple's news. The first thing I want to talk about is there is this form of legal fight that is having about its Apple Store and how certain companies believe that Apple is overcharging in this platform. So today, some of the main arguments for this legal fight came out. I do believe this is going to be something that's going to last a long time, but it is good to, and I don't think it's going to affect the stock price anytime soon, but I do believe as an Apple investor, one should keep an eye on this to see what the end result is. The second recent news is one that just came out earlier this morning, and there has been reports that the chip shortage is now affecting Apple's production in form of MacBook and the iPad. I don't think this report really affected the stock too much because most of the company makes most of its revenue from the iPhones. Until this type of shortage affects the iPhone, I don't think we're going to see any change as investors. Now let's take a look at some price targets. Right now, there are about 26 analysts who are looking at Apple. Out of those 26, 20 give it a buy, 4 give it a hold, and 2 give it a sell. The average price right now is about $151, and that's about an 18% increase for the next 12 months. Apple, like I mentioned, it is not a high growth stock. It's currently expected to grow 5.7% on average for the next 3 to 5 years. That's still somewhat impressive for a company this size. It is profitable though. It is positive in cash flow from operations, and it has a beast balance sheet. So that's the first stock, and at the end of this episode, I'm going to share my thoughts. The second company we're going to take a look at is Fubo TV. This is one I consider a hyper growth stock. This is traded under the New York Stock Exchange as ticker FUBO. It currently has a market cap of $2.9 billion. From its all-time highs, the stock is down 67%. That is insane. And like I mentioned, it's currently, I don't know if I mentioned it, it's currently sitting at $20. And I do believe $20, if you are a technical analysis, you can, without even looking at real charts, just from Google Flat, I can see this 20 seems to be a very, very strong support level for Fubo TV. So for those that don't know Fubo TV is live sports and TV without cable. They have great channels. The main reason is they have a lot of live sports channels working with them. So they are like the number one on sports, on live sports streaming services. Another thing about Fubo TV is they are expected to start doing form of sports betting through their application already, and this is expected to release in quarter 4 of this year. So in the next few quarters, that is gonna come out, and that's something that's super interesting. It's not. I don't think that there's any real platforms that have done it. I want to see how they're going to integrate it in their platform. Is it while you're watching live TV, you'll be able to make your bets and stuff like that? If so, I can definitely see a huge growth in this momentum. We take a look at their most recent earnings, which they gave March 2nd of 2021 in their shareholder letter. They showed that total revenue for 2020 was up 83% compared to the same time last year, with a total of $268 million. That gives this company a current price to sales ratio of about 10, and it's growing at crazy levels. So I think even forward price to sales ratio might be even cheaper. Most of the money comes from subscription revenue, and that was up 73% compared to the same time last year, but they also make a good portion of advertisement revenue. It's about $290 million, and that was up 133% compared to the same time last year. It's crazy. Fubo TV reached 547,000 subscribers, and just on the second half of 2020, it grew by 261,000 net subscriber addition. That to me is ridiculous, the type of growth this company saw. All right, so there has been some recent news about Fubo TV. The first thing is their president, he stepped down, and that to me was pretty weird. I would like to get some more information on why. Maybe you guys can share on the comments below. The second news is, right, Fubo TV is known for its gaming, for its sports place, right? For being the leader in the sports. But right now, there are a lot of new competitors trying to come into this game. So it's just something to be aware of, that, hey, other streaming platforms are also trying to grab some sports channels and add it into them. Right now, Fubo is still the leader, it seems, but just something to keep an eye off. For example, just in late March, before the month of March ended, they signed an agreement to bring Chicago Cub games to the streaming platform. So they're continuing to grow their platform and have more games, more channels for their consumers. And on March 3rd, it had secured market access agreement for its forthcoming Fubo Sportsbook in Indiana and New Jersey. So like I mentioned earlier, I do believe a lot of investors are excited about the sports betting. I'm happy the stock has pulled back a nice amount, right? Pulled down 65%. So it definitely looks very attractive at these prices. Let's take a quick look at analysts. Right now, there's about 9 analysts looking at the company. 7 give it a buy, 1 give it a hold, and 1 gives it a sell. The average price is $41.28 for the next 12 months. And that's about a 92% increase from where the stock is at today. Fubo TV is expected to grow its revenue 35.1% on average for the next 3 to 5 years, so a hyper-growth stock. Unfortunately, the company is not positive in earnings right now, and it's not positive in cash flow from operations. So those two things are, like I mentioned, this is more of a hyper-growth stocks, and with these types of hyper-growth stocks, you usually have to trade some stuff off. If we take a look at their balance sheet, though, their balance sheet looks pretty strong. They have a nice amount of cash and short-term investments compared to debt. To be honest, I wish their cash was a little bit stronger because they weren't profitable and because they weren't positive in cash flow from operations. But regardless, the stock price definitely looks very, very attractive right now. The third stock we're going to take a look at is Okta. This is traded under the NASDAQ as ticker OKTA. It's currently up about 7% for the day, but we can see it's still sitting at some nice levels from its all-time highs. It is down about 18%. It has a market cap of $30.7 billion. So it's not a big company, but it's not a small company either. For those that don't know Okta, you probably even used them right now if you're working from home. Workforces use it as an Okta is pretty much as an identity authentication services. I've used it with some of my businesses or places I work that I need to have Okta's extension to be able to sign in into the server and to other stuff like that. You might also be using Okta in some form of customer identity. Maybe you have an application and it might be in the back end, it might be used by Okta where there's some form of authentication method to make sure it is really you using this platform. And this is a market that I believe will continue to grow, right? The identity crisis is not something new, right? I mean, people have been trying to steal people's identity for such a long time. So the same thing is moving on into the digital footprint, I want to say. And as more people are working from home, as more things become digitalized, I do believe Okta and the type of service it provides will continue to grow. There has been some recent news about Okta. Okta is releasing 2 new products. They expect their revenue for the fiscal year to grow by 30%. Right now, there's 11 analysts looking at this company. 7 give it a buy, 4 give it a hold, 0 give it a sell. The average price for the next 12 months is $273. That's about 22% up from the current prices. Okta is expected to grow its revenue 23.6% on average for the next 3 to 5 years. So a little bit more growth than Apple, not as much growth as Fubo. But remember, you trade something in between for that growth. This company is not positive in earnings, but at least they are positive in cash flow from operations. At the same time, they also have a decent balance sheet. I wish it would have been better. They have about $2.6 billion in cash and about $1.8 billion in debt. So this balance sheet I wish could have been better, but because they are positive in cash flow from operations, I kind of give them a free pass. Now my overall thoughts on the companies, right? So first, let me just put them in order. And the way I would invest them, I think I would enjoy Okta a little bit more, right? It was the mixture of best both worlds. It had positive cash flow from operations and it was growing at strong levels. Definitely had a decent balance sheet, but I wish it would have been stronger. The overall market that Okta is in is one that I am bullish, and I can see that market continue to grow. And with the 2 new products that Okta CEO just mentioned, I do believe that market can grow even faster. The second, I would say, would probably my second favorite, and again, doesn't mean they're bad investments. I do believe they're all would be, I wouldn't mind holding any of these in my portfolio. The second one would be Fubo TV. Fubo TV would probably be, if I had it in my portfolio, it would be a smaller position out of Okta, just because I feel it's going to be very, very volatile. But it is down big from its all-time highs right now. I do believe if one wanted to enter Fubo TV, now is a great time for it. The risk and reward from here is, I think you have a lot more reward than risk, but I do believe it will be very, very volatile. Super hyper growth market, and with the upcoming sporting bets that is going to start doing in the next few quarters, that is definitely a market that many investors will be excited about. The last one would be Apple, and even though Apple is the last, if I was to open the 3, I think it would be a bigger position than Fubo, just because Apple would be one of those stocks that is one I don't mind holding. I know it's not going to be crazy volatile. I know it's one that in the long term of things will probably give me some decent returns and stronger than the overall market, right? Positive earnings, positive cash flow from operations, strong balance sheet. Even though it's having the chip shortage, I don't think that's going to affect it much in the long term of things. So yeah, those are the 3 stocks that I looked at today. Let me know if there's any other stocks you want me to look at. Take care, guys. Have a good night and see you next time.